Hello, friends. Welcome to Weekend Investing Daily Bytes. We're shooting this episode on 23rd of March. So, the FOMC meet happened yesterday, and as most people expected, there was a quarter percent hike in the Fed's funds rate. There is no clarity given by the Federal Reserve whether there will be more hikes or not. The market, in its own wisdom, is pricing towards the end of the year a few rate cuts. But as we have seen in the last few sessions, last few weeks, the market expectation changes very dramatically as per the events are unfolding. So, my sense is that the interest rate cycle probably has peaked, but until it does happen, in real time, we will not be able to, really come to terms with that. Markets have not given any indication that they're willing to go up. Another disappointing day in the sense that by the first half of the day, the market was looking like, it'll create an engulfing pattern on the previous day and we will break out of this sort of a double top here, or even a inverse head and shoulders pattern. So above 17,210 approximately was the level that I was looking for, that in case it breaks, we then may get a leg up towards this gap at least. But that got totally belied in the last half of the day. Maybe it was the expiry, uh, because of which there was squaring up of positions. So tomorrow is very key. So tomorrow, I think today's high and low will be extremely crucial going forth. So if today's low gets broken tomorrow, I think then we will go and retest the bottom. I think that is the gut feel that I'm getting. But we will play as per our strategy. Long only strategy in weekend investing is waiting for good momentum to come through. Stairs, our trading product, is trading along Nifty behind and following Nifty wherever it goes. This last few weeks have been quite choppy, but then previous to that, there were 3 weeks of nice trendiness. Today's heat map, again, you can see very, very mixed bag. Hindalco up slightly along with ITC, Sun Pharma, Bharti Airtel, and ONGC. Most of the banking stocks down. So State Bank down 1.7%, Kotak Bank down 1.5%, IndusInd Bank down, HDFC Bank also down, IT stocks down, Reliance down, Adani stocks down, Power Grid, Asian Paints, Bajaj Auto, Aisha Motors, all of these are down. So very, very confused and I wouldn't say trending downwards, but sort of stuck in a range, sort of a market. And maybe it is the March end, and sort of, if post this Fed action, there is really no trend. So the next thing to look forward would be the results season. It will start from mid April onwards, roughly. Uh, Unless there is a change in the FII buying situation, I think we will sort of drag along like this for some more time. Mid cap index also in a limbo. You can see it is stuck in this range, and getting chopped around. If this is a consolidation, post which it breaks out upwards again, then this is nice. If it's a consolidation and a flag like pattern where once it breaks down, it will go much deeper, then of course we are just buying time here. Similarly, in small cap stocks, again, small caps did not even have that point of breakout. It just went up for the first hour and then it just slumped down. Nifty Bank, which had been doing well for the last 3 4 sessions, actually was leading the move down, and you can see here that a significant fall in the last 2 hours of the day. Uh, Tomorrow we will know whether this was purely expiry related, or this flag like pattern has broken down, and we're going downwards towards 38,600 again. Sectoral overview, nothing much to report. FMCG slightly up, consumption stocks slightly up, pharma stocks slightly in the green. Major losers were PSU banks, real estate stocks, banking stocks, private bank, IT stocks, public sector enterprise. So really a very very choppy few days where PSU banks is taking turn being the top gainer or the top loser every day, and real estate and metals are also doing the same. Metals today were not so bad, but these two three sectors are the ones which are rotating the most from top gainers to top losers. um, Nothing much to report on the weekly or the monthly. IT was the worst hit, along with autos on a full month basis, but on a 3 month basis, they are pretty even. Overall, a year which one would like to get past as soon as possible, and maybe start a new year with some positive hope. Some more Twitter insights for the day. So, if we close somewhere near where we are or lower in the month of March, that will be a statistically a 4 months in a row of decline. This has happened a couple of times in the last 25 years. The usual post this event outcome has been that there has been significant rallies after a 4 month decline. Of course, nothing is written in stone that a fifth month cannot happen. It did happen way back, I think, in 92, 93, or sorry, 94, and we did have several multiple months of down at that point of time. But from a probability point of view, if last 25, 30 years is of any relevance, market is ripe for a bounce in April. So that is some hope to look forward to. Another insight from Twitter is that if you look at the last 30 years of chart on the Nifty, and this is a logarithmic chart to sort of give you clarity over percentage increase in each period. So we had a huge rally in the Harshad Mehta period, and then for a decade the market didn't go anywhere, and then we had a huge rally in 2003 to 2008, and then for about 6 7 years we did not break that top, and then there have been minor rallies and minor rest areas. So we are sort of in that rest zone. The natural tendency of this market, Nifty especially, is to go up dramatically, take rest for a long period of time, go up, take rest, go up, take rest, and that is what exactly is happening. Although the amplitude is a bit lower and lower with each step as markets get more and more mature. So, if the insight to sort of draw from this is that we are doing nothing new when we are waiting for the market to do well in the coming times, but we are just buying time, and there's a time correction going on like it has done in the last 30 years on several occasions. So this is again the same thing that is happening, and if we remain resilient during this period of time, we will certainly get the next move up on the markets. So some focus on now performance metrics. uh, so these are divided into four areas where large and mid cap strategies, and you have then mid and small, then only small caps and all caps. The top section of this chart is the index. The bottom section of this chart is weekend investing strategies, and each column represents a particular period. So over 1 week, over 1 month, over 3 months, 12 months, financial year CAGR since 2016, and max drawdown. This is the layout of this table. So I'll just show you this table. So these are the four strategies in the large and mid cap strategy range. This is the mid and small cap strategies. Nothing much to report here. Uh, this one is the only small caps, MI25 and MI35. Again, really not going anywhere. And in all cap strategies, you had MI30, all cap, ATH and ATH2. Again, very, very nominal uh, gains or losses in today's session. So you can freeze the frame and look at these stats. These stats are also available on weekendinvesting.com. They're also available on the Weekend Investing Hub. They're also available at the weekendinvesting.smallcase.com. So the stats for all strategies for every session, every day since historical are all available at on tap uh, in the system. Spotlight for the day is on the stock JK Tire and Industries. A huge price move from 150 to 168, and a equally attractive volume move. Something of the sort that happened here. Of course, it did happen here as well, but that was coming after a long run up, and that was sort of the exhaustion move here. This was consolidation and then a move, but it did not last for too long before the sector sort of gave in. But this, after a nice consolidation, it has broken out of this range. So as a trading watch list, you could watch list this stock and look for dips on this stock towards this breakout period, breakout price, and create a trade setup somewhere around 160 odd, if you can get that, and then maybe play for higher. So these are some of the ideas that I want to highlight. These are not necessarily stocks that are already in our strategies. It may come in our strategies if it continues to perform, and neither is this advice that you should go ahead and buy JNK Tire. It's just a watch list item for you to create a, a trading setup on using these filters. So this is all I had for today's session. Thank you so much for watching. Please do share and circulate these videos amongst your friends and family. Our ask from you is that you increase uh, the popularity of this channel if you like the content, and it will be great to have more access for more newer investors and users to look at these data and insights and develop their ability to invest in the markets. So thank you so much. Goodbye. Bye.